Welcome back to the Wall Street Podcast. Today we're diving into the latest Citi research analysis on Amazon.com, Inc.
That's right. We're looking at their report from July 22nd, 2025. It's titled 2Q25 Preview. Focus remains on AWS growth. Insights from Prime Day 25.
Okay, so the focus is squarely on the upcoming Q2 earnings for Amazon.
Exactly. Citi's digging into the key drivers, AWS, retail, what Prime Day tells us, and crucially, margin expansion.
And their overall stance.
They're maintaining a buy rating,
Huh.
and they've actually raised the price target to $265.
$265. Why the confidence?
Well, they point to strong retail performance, what looks like accelerating AWS demand, and improvements in margins overall.
All right, let's unpack that. Citi highlights 5 key areas they're watching. What's number 1?
First up is AWS growth. Citi's expecting an acceleration in the second half of the year.
Acceleration. Okay, what's behind that?
It seems to be driven by two things. The big infrastructure build-out they did in the first half, and strong tailwinds from generative AI demand.
Gen AI, right.
Yeah, they even mentioned Anthropic's recent contract wins as an example. For Q2 specifically, they're projecting AWS revenue growth at 16.5% year over year.
16.5%. Got it. What's the second area?
Retail demand. Citi says this improved throughout the second quarter, and it got a boost from a pretty solid Prime Day.
So the consumer is holding up for Amazon.
It appears so. They project North America retail growth at 9% year over year and international at 11%. So yeah, pretty robust.
Okay, third point.
Advertising demand. Their channel checks suggest this is still very strong, and it's a big contributor to operating income, of course.
Right, the high-margin advertising business.
Exactly. They're forecasting Q2 ad revenues up 17.5% year over year, ex FX. Shows Amazon's platform strength there.
Makes sense. What's fourth?
Operating income and CapEx. They actually expect operating income to beat guidance.
Oh, interesting. Why?
Mostly efficiency gains and that continued mix shift towards higher margin areas like ads and AWS. They also note headcount seems under control.
And CapEx, still investing heavily.
The guidance is still $105 billion for 2025, with the lion's share, about $74 billion, earmarked for AWS infrastructure.
$74 billion for AWS. Wow. Okay, and the fifth point.
North America retail margins. They see continued gains here.
Driven by?
Increased automation, basically. More robots like Vulcan, their newer warehouse system, and also that $4 billion investment in rural fulfillment centers aimed at faster delivery.
Right, speeding things up outside major metros. Now, you mentioned Prime Day boosting retail. Let's dig into that a bit more.
Yeah, Prime Day 2025 was apparently Amazon's biggest ever 4-day sales event.
Biggest ever. Any numbers on that?
Citi estimates it contributed about $8 billion in revenue. And importantly, they think it added roughly 500 basis points, so 5 percentage points, to Amazon's third quarter revenue projection.
5 points to Q3. That's significant. What else stood out?
A few things. U.S. website unique visits were up 17% year over year during the event.
Okay.
And U.S. app daily active users, the DAUs, they surged 34% year over year.
Huge jump in app usage.
Definitely. Also a noticeable shift in what people bought more towards essentials. Think electronics, beauty, household stuff.
Less discretionary spending, perhaps.
Could be, though average household spend did increase slightly by 2.7% year over year. But interestingly, the average item cost decreased by 12.4%.
So more items, cheaper items, but slightly higher total spend.
Exactly. And the other big piece was advertising. Ad spend nearly tripled per day during Prime Day.
Tripled?
Yeah, with Amazon's own DSP, their demand-side platform, gaining a lot of share. Plus, they mentioned Gen AI tools like Rufus helping with product discovery.
Okay, so Prime Day was big for sales, engagement, and advertising. Let's turn to guidance. What does Citi expect Amazon to guide for?
For Q2, the quarter ending soon, Citi's projecting total revenue of $163.5 billion. That's up 10.5% year over year.
Okay, $163.5 billion. And operating income?
$17.1 billion, which is a 10.5% margin. Both those numbers are basically at or slightly above consensus and Amazon's prior guidance range.
And looking ahead to Q3?
For Q3, Citi projects revenue at $174.35 billion. They expect Amazon's official guidance to land somewhere between $171 and $175.5 billion.
And Q3 operating income?
Citi's projecting $19.6 billion. They anticipate Amazon will guide for somewhere between $16 and $20 billion.
All right, let's dive a bit deeper with some specific questions that come to mind from this. First, that AWS growth acceleration you mentioned for the second half. What really gives Citi confidence in that, especially with all the talk about AI?
Well, it seems to be about readiness. That big infrastructure investment in the first half means AWS now has the capacity ready to go. They can onboard these large generative AI workloads like those Anthropic deals without hitting bottlenecks.
So it's like they built the highway, and now the high-value AI traffic can really start flowing.
Exactly. It lets them lock in these long-term, high-value contracts and really solidify their position as, the key platform for serious AI development.
Okay, let's connect that to Prime Day. You said there was a shift to essentials, faster shipping focus, and that huge jump in ad spend. How does that signal a broader strategy beyond just a sales promotion?
Right. It looks like Amazon is using Prime Day strategically in a couple of ways. First, to really cement itself as the go-to for everyday items, leveraging that faster shipping network they've built.
Making Prime indispensable.
Precisely. And second, that tripling of ad spend. It shows how crucial Prime Day is becoming as a monetization engine. It's a peak time to capture seller ad dollars and use tools like Rufus, their AI assistant, to drive discovery. So it's both driving retail habits and extracting more value from the ecosystem itself.
Dual strategy makes sense. Final point then, margins. With macroeconomic uncertainty always a factor, what are the internal levers Amazon is really pulling to keep expanding operating income margins?
It boils down to efficiency and mix. Internally, they're focused on keeping headcount lean, pushing automation hard in fulfillment centers with things like Vulcan, and constantly optimizing the business mix.
Shifting more
Towards those higher margin revenue streams we talked about, advertising in AWS, these internal efforts are really designed to drive profitability, kind of insulating them to some extent from external economic pressures.
So, pulling it all together, what's the main takeaway for investors from Citi's analysis?
I think the key theme is a strategic pivot from just growth at all costs to more profitable growth. Amazon is leveraging AWS infrastructure, making retail more efficient through automation, and really dialing up monetization via ads and AI tools.
Building resilience and expanding margins, even if the broader economy is tricky.
That seems to be Citi's view. They see Amazon positioned for sustained growth and margin improvement.
A compelling picture. The real question going forward might be how effectively and how profitably they manage this next phase, especially as those massive AWS and AI investments start to fully pay off. Thank you for joining us on this deep dive.